All right, Jim, Jim Carson from Kai Wealth. Is it Kai Wealth Advisors?
We have two entities: Kai Volatility, which is the hedge fund entity regulated by the NFA, and Kai Wealth, which is our wealth advisory business.
Very cool. And for those out there who don't know who you are, could you give us just a brief history? I mean, I know you used to be a market maker. At one point, you accounted for I think 13% of all options trading on the S&P. You've been in this game for a long, long time. What else is there?
Oh man. Born in London, lived in Turkey as a child, and then at the age of 4, grew up in Texas. That's all you
Ooh,
got to know.
well,
Yeah, so it's a mishmash. The whole thing from my origin story is always square peg, round hole. Figure it out.
okay. And I know that you were just on vacation. Were you trading at all while you were on vacation?
The team was. I was definitely in conversations with the team, but yeah, I was off for 2, 3 weeks. And generally, when I leave, the world explodes. That's how these things work. So
Jeez,
I
jeez.
went to Vietnam, Hong Kong, Japan, to Tokyo, and then off to the East Coast with my son to finalize boarding school, like prep school decisions. So it
Those
was
are those are
a
some
world.
those are some suspect places you were going. You weren't trying to cut any tariff deals for the U.S. government by any chance, were you?
Uh, no comment.
Oh man. Oh, dude, be
I do
careful.
have some interesting
Very.
thoughts in Japan. I was staying at uh, the Imperial Hotel in Tokyo, and the whole time, literally the day I got there, Lula da Silva of Brazil got there, and he was there for a week. We were only there for 3, 4 days, so I actually think that was really interesting that Lula da Silva was in Tokyo for a week right now. I think that actually says a lot of interesting things that we could dive into right now. But Japan is an interesting place, particularly at this moment in time. Maybe the most interesting.
Why do you think that? What makes it so interesting?
Well, so for 25 years, the U.S. backstopped a Japanese debt bubble and capital market bubble, and allowed them to monetize, their debts. They allowed them to take their debt to 250% of GDP, and the deal there was, you scratch our back, we'll scratch yours, and they bought a tremendous amount of U.S. debt, and but that was a very important deal, and it was always implicit that Japan would be there when the U.S. needed some similar help, and here we are. So I think it's a very
Are they
important
showing
time.
up? Are they pulling their weight, doing their part of the deal?
They will. And I tweeted this actually early last week. But I think I would not be surprised if coming out of this weekend or soon, maybe that's next week, you get some new news out of Japan about a willingness to not just work together, but some kind of grander deal with Japan. I think, the first visit to Donald Trump here in the U.S. was the Japanese, and they came bearing a samurai helmet.
Whoa, that's so
The
Japanese.
yeah. So I think you need to understand who the Japanese are also. Whereas we may at times be, change from vacillate from one side to the other, and it's hard to, the U.S. is messy, right? Put it this way: you walk through the streets of Tokyo, and there's no mess on the ground.
Yeah,
Nobody, and that's not because there's a bunch of people cleaning it up. It's just people don't litter.
yeah. You do get the
And
occasional super drunk salary man.
of course, and
Yeah,
nobody's perfect. But the
no.
point here is that they are a do what they say country, and loyalty matters. And they have 25 years of loyalty. That was a very important time from the U.S. And whether it's Donald Trump or somebody else, there is a commitment from Japan, I believe, to to stand in line and to turn the tide. And now, more than maybe a week ago, we know two things that are very important. One, that the most important thing, which I would have told you a week ago, but now the world knows it and Donald Trump knows it, that the most important thing right now is the long-term bond. And the long-term bond needs liquidity. 29% of our debt is external. About a third of that is owned by Japan. We know what China's doing with their debt.
What are
What's
they doing?
Japan doing with their debt? No, China's selling their debt.
Yeah.
So Japan's probably pretty important. So there's a lot of, if you want to connect the dots, there's a lot of dots here. And someone in the Oval Office is particularly motivated all of a sudden, and this is why we were confident we would get a bounce, to soothe the bond market. And so Japan is both the easiest person to work with, entity to work with, probably the most important one to work with at this juncture. And if you are going to stand up to China, ultimately, you need allies and you need at least a win at this point to now start discussing collectively more with Europe and the other allies. So watch Japan closely.
Interesting.
Can you speak to some of the other allies while everyone's talking about? People are obviously worried about our own reputation and whether or not, even with this pause, damage is done here. Will other countries be as loyal as Japan, or is the damage really done here, and it's going to be a new?
Look, this is realpolitik, right? Like, there is the narrative and how other countries feel, like the people feel, and what the media says. But when you get into governments understand the realities of pressure, right? And also, people forget. The narrative can be one way, and then 5-10 years the other way. So, yeah, I think people make too much about this being, oh, we have ruined America's reputation on the world stage forever. No, I don't think that's true. Now, they may think twice next time they assume that what the U.S. says will last for longer than a 8-year administration or 4-year administration. But no, my belief is that ultimately the real pressures, the incentives, which is how I make that's how make predictions, how I think about all things in this world, will ultimately define the outcomes. And the reality is, we live in a world right now where people need other countries need other countries. This is no longer a Federal Reserve driven world where it's under control and we're doing supply side economics and it's globalization and it's all about corporate profits, and kumbaya. This is a world where, the big guy in the room is injured, doesn't have all control, and it can't because, again, of inflation and the 10-year, whatnot, going from 0.3% to 5%, and the issues that the U.S. faces. And in that situation, you have everybody trying to find alliances and figure out how to regain their own control and help their own people. So my view is that the U.S. will, it's still the biggest guy in the room. It doesn't need many alliances to take back control. But that said, it is a time in which there's less control, and increasingly, as time goes on, much like the 60s and 70s, I think it will be a much more bipolar world with continued risk. So, long-winded way of saying, don't think for a second that everybody's going to throw out the U.S. and band together to counter the U.S. And that's kind of what needs to happen in order for things to swing the other way. We will have, again, a Japan plus a couple of other countries who who are very friendly and have been for a long time, will come to the table. And the best thing that happened is we are forcing Trump to the table. The markets,
Right.
you know, which, some people call the fourth branch of government media, or the fourth estate, you may have heard it called, right? The fifth estate, I think the Economist termed this last month or 6 months ago, in the last several months, is the market. And so the market is pushing government officials into line. It's holding their feet to the fire here. And so that about face you've seen, and now I think the other thing I'd love to talk about at some point here is, the division of the Trump kind of administration, the Elon and Lutnick spat, I think is actually something very few people are talking about. I think it's critically important. I think it speaks very highly to a massive change that we are seeing in what we thought this administration would do. And that's being done because of the markets. Tesla stock getting crushed like it has, equities writ large getting crushed like they have really, really divided this administration, and is forcing a very different set of policy than many people thought was coming.
I
She told
just
people this
speaking
was
of-
likely to happen.
Yeah, just speaking of the yields, Marco Kalanovic, is it Kalanovic or Vich? Who cares? The former chief strategist at JP Morgan, he tweeted today something peculiar. He said, some clown on TV seems on an exchange floor saying 10-year yields will go to 10%. He probably didn't check stock of U.S. government, corporate, and individual debt and do some fifth grade math with it. Amazing. Increases my conviction that bonds are about to rally. Now, I think it's you who he said was a clown, and you had some choice words for him. Would you like to call him out here on the show?
First of all, Marko Kolanovic, for a decade, was the JP Morgan chief strategist. He is more quantitative than most chief strategists have been. And so I'll first say a couple of nice things. When he came to kind of preeminence, I definitely had listened to quite a few things he said. I would sit back and say, you know what, he's got this part right, this part wrong, but more times than not, he understood a lot of the effects that most of the entities at JP Morgan wouldn't. Okay. That said, if me going on TV on CNBC and talking about the secularly increasing inflation and long-term rates increases his conviction, I'm gonna first tell you, Kolanovic saying that that's not possible could not be a better sign. That is you talk about increasing my conviction. That is exactly what I've heard from every single person since 2020, when I, from the mountaintops, very publicly have been saying nonstop that these yields are going higher at the long end of the curve, and I've explained in detail why. And every turn when we've heard, oh, this is transitory, or this is not, at every turn, they've continued to work their way higher. And guess what? They've gone from 0.3% to 5% at the peak, right? And we're not too far from there.
And you think that they're going to go all the way to 10?
In the next 5 years, they will go to 8 to 10%, and that's what I said publicly.
And what will that do for the stock market?
The same thing that it's done for the stock market in the last 5 years.
Gotcha. So it's not necessarily bearish for equities.
No, it's a matter of how quickly it happens. I think in his mind and people's minds, they hear, 10%, and they think we're talking about it's going there in a year or two.
Yeah.
I said, my view is 5+ years. It may take, 5 years to get to 8, maybe 7. Who we'll see to get to 10. Look, I won't do the full treatise on why, but the simple answer is we increased inequality dramatically here in the developed world through monetary policy and supply side economics. So very simple way of saying, if you take interest rates to zero, every time you need stimulus, if you give the money, you do the stimulus by sending people money to corporations, to wealthy individuals. That works. That's a cheat code. That works great for stimulating technological development, increasing profits for corporations, right? And guess what? Not causing inflation. And the Fed has a dual mandate, very simple, price stability with growth. So it's the cheat code. Just do more and more and more. And at the end of the day, guess what? If you do more and more of that, that's deflationary, because what does a corporation do? Seek profits. They try and reduce their cost of their inputs and deliver new technologies and new growth. That sounds pretty amazing. So what do we do for 40 years? We took interest rates from 20% to 0. And every time we had a crisis or a wobble, we lowered interest rates more, we lowered interest rates more, we lowered interest rates more. And when it got to 0, what did we do? We did QE, we did more money. You just keep sending money to the top of the distribution. Well, okay, that sounds pretty amazing. Why wouldn't we just do that forever? Because there are human beings in this system. And there's not just two mandates. There's not just two things that matter in economics. It's not just price stability and GDP growth. It's about who's getting the money. If you keep sending it to Elon Musk, if you send every dollar ever created to Elon Musk,
as we should,
and you send it to and you send it to nobody else, and you increase GDP by doing that, and you say, look, GDP is growing, but one person has now $500 trillion of net worth, and everybody else is worse off. That's probably not what we want or what is intended.
now
So
you
the
sound like a
question is,
commie.
yeah, and by the way, you increase the mean. The mean is going up, but the median is collapsing. And that's what's happened for 40 years. Supply side economics, the trickle down economics, does not work for improving median outcomes. It works for creating asset inflation without goods inflation. Because why? Because if you send money to the top, what do those people buy? They buy investments. They don't buy goods, right? And so we created massive inequality for 40 years. The Fed did. When I say we, the Fed did, quite simply. And guess what? At some point, and this is, by the way, not just a 40-year history or an 80-year history or an American history. This is thousands of years of human history. We have two concepts. We have survival of the fittest, which is a winner-take-all system, right? And then we have an idea called fairness, which your mom and dad probably told you life isn't fair. And it's not, it's unnatural. But it doesn't mean it's not important. If we believe as human beings that we are individuals, we have a larger frontal cortex than any other animal on the planet, we can objectify everything so we have a better understanding of self. So if we believe we are self, if we are an individual, and then we look at each other and we say, well, we should be equal, enter America and democracy. If we believe that as a people, then guess what? You can't just do free market economics. You have to have government, and you have to have some form of rebalancing. Now, that's not the most efficient, right? This is why Doge is a problem, because if you get rid of government, it's a, rich eat poor world we live in.
But that's good for business. We need
Yeah.
businesses to be able to function unabated and unregulated.
Unabated,
because
right.
That's how capitalism should work.
Yeah, so I want to be clear. I am financially, I would say I am fiscally, I'm a Republican. I believe in free market economics because it's the natural system. It's what's going to work the best. However, I also have compassion for people, for human beings. And you must have a safety net. And honestly, it's better for the whole system anyway, because at some point it takes you out of this boom and bust where the people eventually get so unhappy that they want to burn it down.
Yeah. You've been tweeting a lot about the rise of populism. Obviously, we've been seeing it on the right more so than the left for now. And
Not true. It's both sides. I want to be clear.
True. But you've been speaking a lot about how there's kind of people are starting to wake up to the fact that it's not necessarily right versus left, but haves versus have-nots, rich versus
Correct.
poor.
Which is
Where
also
do you-
generational, by the way.
yeah. Where do you like my? I have so many questions for you. And by the way, if you're ever in Los Angeles, please come by the show. We would love to host you in person.
I'll take you up on that.
Please.
Can you explain that generational thing real quick?
Sure.
Yes, that's actually really important. So people think wealth disparity is just rich versus poor. But what happens when you come out of college? Are you rich? As a generation, at least?
No.
Out of high school? No. You're labor. And what happens when you're 70 years old? As a generation, you're capital. So when we talk about wealth disparity, we're also talking about generational wealth disparity. Anybody who's 40 or younger, millennials on down, have lived for 40 years. They were born in 1982. You were born when interest rates peaked and populism ended, and we went into a supply-side economic model. And all that happened for all 40 years of your life is increasing inequality, increasing inability to make more wages, right? Increasing, wealth disparity and also, by the way, technological development, right? Because you're pushing money to capital, you've gone through massive globalization, massive technological development, and on the other side of that, massive wealth disparity. And you have been in the bottom, living in mom and dad's basement, trying to buy a home and unable to. Is it any surprise for people that Bitcoin has become what it is? It is literally the zeitgeist of that generation. If you're a millennial, you at 20 started saying, this is effed, right? This is unfair. And you also grew up in a technological time, so your thought process is, how can we use technology to solve this effed system?
Mm-hmm. So
And meanwhile, you're behind and you're trying to catch up, so you're going to YOLO those crypto coins, right? You want the most convex thing you can, because that's the only way you're ever going to catch up.
Mm. Yeah,
So crypto
GameStop.
is like the embodiment of this generation. It is, and if you ever read The Fourth Turning, generations, because we live an 80-year cycle, they're 20-year generations, and every four, right, 20, 40, 60, 80, there's no longer anybody around to have seen the last cycle. And so we just repeat and rhyme in these generations. And this generation is much like the baby boomer generation who lived through the last version of this, right? Is also a demographic bubble. It's a bigger amount of people. And so the political dominance of that generation actually more or less peaks in 35. That's when the baby boomers have, 9 years from now, have mostly started to go. And the balance of power is dramatically higher for millennials. So, 4 years is an election cycle. People don't think that's a long time. 8 years is 2 election cycles, sometimes with 1 presidency. But we're living in dramatically different political environments as we move forward because there's a massive generational divide. And that's why populism is not going away. It's not like, people just wake up one day and politically be like, okay, populism doesn't work. No, this generation needs to make the same, have the same issues they had, the last time around.
So how do you see this playing out? How do we fix this huge divide? How do we wean ourselves
You can't just
off?
fix it. You can't just make it go away.
Right.
That's the problem. Everybody's like, that's actually the problem with the Trump administration. They're trying to do what Ronald Reagan and Volcker did in 1982. They're not in 1982.
Right.
It's 1968. It's 1969. And by the way, the things that Ronald Reagan did and Volcker did, this is why it's such a false narrative. Richard Nixon and Arthur Burns tried to do in 1969 and 70. And they're lampooned when it was literally the same policy. Supply side economics. What did Nixon do? Nixon opened up China, right? Nixon tried to took us off that gold standard, right? He took Arthur Burns in and tried to consolidate the central bank to as much as possible politically so they could do more monetary policy. It's supply side economics. Because that's, again, as I mentioned, it's the only cheat code to get out of this mess. Free markets. The problem is the people weren't okay with that. And how did Nixon's attempt end? Price controls and Watergate. So,
Crying on national TV.
yeah. So, literally, this is 2 months ago, or 3 months ago, when everybody was in peak, Donald Trump is going to save the world. Elon and Donald Trump are going to completely transform this world. I said, okay. Not anti-Trump. I'm not pro-Biden. You know how many presidents we had from 1964 to 1984? 20 years? You know how many presidents we had?
It's probably at 100 at least. Thank you for laughing.
Yeah. The average term was 4.25 years for 20 years.
How does that wait?
Because of
Okay.
because you had deaths, you had you had
Yeah, there was
assassinations,
that
you
one
had
famous one where his head just did that.
yeah. But you had Watergate, right? So, but the point here is, right? And by the way, the last 40 years, the average is over 7 years.
They're getting better, stronger.
We now
Yeah.
have the strongest president of all times.
No, it is true. Nothing can take this guy down.
Yeah.
One guy tried, but that didn't work out.
Yeah, but that's a real
but
thing
we'll-
too, by the way. There are more assassinations that happen during these periods.
Yeah.
There are more, populism is a time of global conflict. And it's not just, and that's a reality. I mean, MLK, JFK, RFK, like those are the things that happen during populist periods. Presidents getting kicked out. Watergate, also things that happen. Right? So the point here is this is not about Donald Trump as much as he and his followers would like it to be about. It's not about Biden as much as their followers would like to think so. This is about why Donald Trump is a vehicle, right, for this narrative and this desire of the people, right? And I think to tie back to what we were talking about before, 3 months ago when everybody was like, Elon and this administration are going to be different than we thought. They are not going to be populist. And then people got really excited, on the top. And meanwhile, the people on the bottom still thought, oh, they are going to be populist because they had a very mixed message. Because you had Lutnick and the tariffs, right? And the populism part, which was last Trump administration, by the way, same group. And a new group, Besant, Elon. And their view was, we're going to switch. We're not going to do populism. We're going to tell people we're giving them populism, but we're going to do the supply side thing again. Because that worked under Reagan, right? And that's how we're going to get out of this inflationary mess. Because we know the 10 years a problem. We're going to get those yields down. We're going to get inflation down. And we're going to fix the problem. You can't fix the problem. The problem is structural. It's political. It is what people want. And it's the whole reason that Trump became president, because why he became popular. His first inauguration speech was the rusted out cities in middle America. I'm the tariff man. He's the tariff man. You can't be a make America great again. You can't be populist. You can't be protectionist. And by the way, protectionism and populism are part of two sides of the same coin. You cannot be that guy and then still be the supply side guy with Elon and Bassem. And what's become clear is whereas everyone like Elon and corporate America thought for a second, especially look at the budget that they tried to push out, you're going to continue the tax cuts and then cut SNAP payments, cut Medicaid, housing and urban development budget, and then do DOGE, which is also cutting, regulatory protections, right? All of the things. This was all of a sudden a complete 180 from who Donald Trump came in as and who people voted for in terms of that populist message. And so my message 3 months ago was, okay, you're right. This is the way to get inflation down and growth up. But if you start taking money away, the money that's been given to people and the rebalancing that's happening to poor and the millennials on down, good luck. Like, see you in 2 years.
You were talking about a few months ago. You were calling famously for a pullback after February or March OPEX, then a rally into May, followed by 40. I believe it was a 40 to 50% drop into Q3 and Q4. Do you still think that? Like,
So
has all
let me
of this
adjust
changed?
some things have changed.
Yeah.
But the broad thrust is still the same. So to refine some of the things that I had said, and then to make the adjustments, to accommodate the changes of the things that we've seen. The call, and to be clear, I can even go back to last year. We were very vocal. I'll just go all the way back and give you a quick trajectory, where we've been and where we're going. Last year, I was very adamant that we would get 20 to 25% rally in the market because it was election year. And election years during populist times have massive spending and massive support. And we got that. And then I said, next year will not be that pretty. That was back early last year. We got to June and called for placidity during the summer with a big vol event in the fall. Got August, we got a massive vol event, but that I was very clear that after that vol event came, you wanted to buy the market and it would peak likely at January expiration. Got the rallied all the way back into December, a December OPEX, given the relatively light momentum that we were seeing at that point, which should have been the most, we were still going up, but which was weaker than we would have expected. We said, don't wait till January. The peak is coming here. This is the time. We topped at December expiration, as we expected. And we said the bigger part will come in February expiration. So this is really just a brief beginning, but get ready. It's coming by vol. You don't have to short the market yet, but by vol. That was the low in vol. Day after February OPEX, we rolled over, and the call was for 10 to 15% from Feb to March OPEX. And we got 10 to 15% from Feb to March OPEX. And then we got it wrong for a second. Hold on, let me get to that. But the call was that we thought at that point we would likely get some type of bounce. We thought it would be a counter trend bounce that would take us anywhere from 5,900, 6,000 to the highs, somewhere in that range, 300 points, so within 5% of the highs. And that a bigger decline then would come in May or June. And that decline would become a secular decline for a year and would take us 35 to 50%, 35 to 45, 35 to 50% from the peak to trough. So that's been the call. That's been the last 2 years of point to point. We didn't get a 10 to 15% decline. Well, we did during that cycle. But then we got a continuation that got us, spiked us down to down 22, 23% at the bottom, very briefly. But here we are back down 12%, right back to kind of where we were. And so we had this momentary whoop, And we've been long dated vol, so done very well. But we believe this is a couple things have changed the path a little bit. We do still think that there is a little bit more upside from here on this bounce back. But we no longer think we will likely get to 6,000, 6,200, right? It's possible, that this was just a deeper cut and we'll just get a back to on path. But we believe enough damage has been done psychologically. That's one. So people are looking like more aggressively wanting to get out, are more aware that this isn't just a path, but are seeing what we've seen for some time more acutely. So that's one, which is very important. Two, the 10-year, which we just talked about the stock path, we've also very accurately called it the yield path, the 10-year yield path. But the 10-year yield and its price action have started to cause some acute stress and some acute concerns at bigger institutions. And we believe that will mean you have ready sellers into a rally and make it less likely to go all the way up. Lastly, back to the Elon Lutnick piece. We've had a significant change, and when I make these predictions, it's not just about the positioning in the markets. The short-term parts is really about positioning, right? But it's also about macro and liquidity and the incentives and the reaction functions of the biggest players. And that reaction function has changed for this administration meaningfully. We thought it would, as I mentioned, but not this quickly. The degradation of the relationship between Elon and Lutnick and Trump's quick move to support Lutnick and Elon's seeming departure is incredibly important and significant because it accelerates, and that's part of what the 10-year bond is telling you, because it accelerates the populist push. It removes the more market-friendly part of the administration, right? Who's a better kind of face for the stock market than Elon Musk? Right? So Elon Musk's lack of power and more importantly, that side of the party's ability to sway the tariffs, the populism, the old kind of core Trump group, and his message is concerning for the market. We always thought that was the big story and the big problem to begin with. That's the whole populist art that we've talked about that will last 15 years, that we're already, call it 4 or 5 years into. But the important part here is that development means there's less likely to be there's more confidence that we're not going to get the blow-off supply side economics that we need for this thing to really juice for a short period before it ultimately, hence come to roost. So that's where we stand. We still think there's probably a little bit left in this bounce. Maybe it's another 400 points to the upside in the S&P, which is 8%.
Love to hear that.
But 4% can happen in a day. It just did. 10% happen in a day. So don't get into, hey, we're back in rally mode. The big story and the overwhelming important story is the 10-year was spiking as the market was stressing. So if you're waiting on bonds to give you relief against your stocks, good luck. We are in a stagflationary environment. We have been for 4 or 5 years. I've been very clear about that. You are going to lose money on both sides of your portfolio if you're holding a 60-40 portfolio. And the way you're going to lose it, by the way, when you zoom back out, is actually not from a crash, even though we're talking about a significant decline right now. It's going to be the same way we've lost it since 2021. 2021, we called for a dead decade, for no returns in nominal terms. And in real terms, a loss of more than 50% over 14 years.
That sounds cool. That sounds great.
But guess what? That's what's happened so far, even though it doesn't
Yeah.
feel like it. In 2022, we got a 25% decline. In 2023, we got a 25% rally. In 2024, we got a 25% rally. And here comes your 35, 40%, maybe 50%. We'll see decline. And then you'll get a 50% rally, and then you'll get a 20, rinse repeat for a decade. It looks like 1968 to 1982. And at every 50% drop and 50% rally, people will be like, bull market, and people will be like, bear market. And meanwhile, do you know how much money you've lost in real terms since the end of 2021? About 20%. Market's gone nowhere. You've lost money on your long-term bonds. And guess what? Inflation has eaten away at your income and your wealth day by day. The 67% loss, 68 to 82, 14 years happened because of inflation. Market went nowhere. You lost just as much holding cash.
How do you think the 10-year bond not going Trump's way will affect how he negotiates the whole tariff situation?
Well, I think I mentioned at the beginning with Japan.
Right.
He realizes the need for economic, like central bank allies. I think more important than trade allies, he needs a central bank ally, or two or three. And so I think that focuses his, makes him motivated, first of all, to calm things a little bit. It was pretty amazing if you listened to him on Friday. By the way, Donald Trump just sits in a room and just talks, I'm convinced, because to himself, like there's a recording and he just talks. Because I have a squawk box, on our trading floor, and it's just like, Donald Trump says this, Donald Trump says that, Donald Trump says this. Friday, it was like, every word was like, we are going to get what we want. We are going to step on their necks. We are X, and if you don't, then we'll go higher. And it was like, higher tariff, higher tariff. And then the market crashed on Friday.
Yeah.
And then the market crashed on Monday. And then, importantly, actually Friday, the big deal was Powell spoke at 11 o'clock Central. And Powell said, you're on your own. Like, it was hawkish.
But now, just today, didn't they say that they will step in if necessary?
Of course, they would always step in if necessary, right?
Yeah.
Like they have to, like, the Fed's not like, what they're not going to do is be bullied into doing a policy so that then Trump takes away the thing and then he gets, but yes, in a market, a big bond issue, like that's what they issue, they buy the debt. So, so yes, absolutely they would at some point. That's always true. The question is, where is that put, in the market and what do they do? But yeah, Powell basically saying, nope, not interested. You guys, you're on your own here. Good luck. I think that followed by the market reaction Friday and then into Monday, and then the 10-year bond then starting to really go higher, and that really shook the administration. I think that's right. They realized, and then you should have heard the difference on Monday of the Trump podcast. The Trump podcast was like, we are going to have a deal soon with all these people. It's happening. We're making a deal. Like all these guys are coming to the table. It's happening. It's happening. Like it was just please don't crash the market anymore. Basically.
Yeah. Even though we don't care about it.
Yeah. Exactly.
I have a couple as we're winding down because I don't want to take any more of your time, and we usually only go for like an hour. But I have a couple just like rapid fire-ish questions. I've always wondered, what the hell are you doing? What do you guys do on the floor there at the Chicago Board of Options? You guys have on your colored jackets. Are you doing like trading places where you're doing the hand signals and shit? Like, why do you even? What are you doing all day there?
Trading.
Cool.
Yeah.
Right.
There are hand signals, less hand signals than ever because most of it's done over like handhelds, and trades are, and messages are happening that way. It used to be you had to fully communicate very complex sentences and ideas over hand signals. Now it's like that matter of, sell, buy, buy 20, buy 2,000. I'll do, it's buy, sell,
Dang.
and kind of what the contracts are. Yeah, but ARB is what that sign language is called, ARB. When I came to the business in '98, like ARB was, like a second language. Much of that is not used anymore. But what do we do? I mean, it's a dude's locker room
Yeah, you're hanging out with
mostly.
your boys.
It's pretty funny. Some of the best comedy comes out of that floor. There is, I mean, 300 dudes stand together all day, same dudes every day, and stuff's on the TV. Everybody, you have just all these narratives that come up and develop and just become, everybody's messing with everybody all the time. So yeah,
You ever seen
it's a whole
anybody
other
lose
world
their
down there.
shirt in real time?
Oh yeah, of course.
Oh man, well, it's like, yeah, I know it's probably not polite to ask, but I am curious, like, what your biggest win ever was, what your biggest loser ever was in an intraday basis.
In terms
Um,
of dollars,
yeah, you
well,
can't,
I
you
mean,
don't have to say that.
we were 13% of the volume of the S&P 500 options during the Great Financial Crisis.
That's cool as hell, man.
That is a Yeah, yeah, to speak about like leverage and like risk. Um, yeah, I mean that's just it's a liquid. You're holding massive positions. They're convex, and you have you know massive notional leverage and exposure. So, yeah, there's all kinds of crazy stories and things that happened. I mean, during the Great Financial Crisis, I'll tell you one. You know, there's one of the floor brokers that we stood next to. All stood next to and fed trades to people on the floor for decades. Had a big order and traded it and did it the opposite way during the Great Financial Crisis. And he literally picked up the phone maybe a minute later, 2 minutes later. But things moved so fast, the market had
Yeah.
moved 10% by the time he came back to the market. And by the time, 2 minutes more passed, by the time he had to do something about it, he was bawling, like a
Man,
baby. I'm gonna lose my job. Uh, may have liability. Like, listen, I'll do anything. You guys gotta help me get out of this.
jeez.
And I had taken down 40% of that order.
Against him?
Yeah, I mean, not against him. He's a broker. So the word a broker
Sure.
takes other orders and he executes it for them, and he executed it wrong.
Yeah.
So he had given a fill to the guy for something wrong, and that guy knew the trade. And so his business was out of business. He was definitely out of a job, if that was. And there's this will give you a sense of how things work on that floor. But when you're 13% of the volume, or you're one of the biggest groups down there, I don't know if it works this way anymore, but at least it used to. There is a kind of a code, right? Like you work together to, and do the best you can because you're all working and living together every day. It is not just a screen.
Mhm.
And I looked at my sheets, and it was my 40% was like a $5 million loser. If I had to take a winner for me, and I would have had, if I had to take it off, I would have to give up $5 million. All in, called $12 million mistake. He goes, he came up, he was like crying. He goes, Jem, if you let me out of this, I swear to you, I will make it up to you this year. I swear I will make it up to you. Right? And I knew there's no way to know that. $5 million is a lot of money. For me back then, that was even more. And I turned to everybody else who had done 5%, 5%, 5%, 5%. And I said, I'm taking them out. If you guys don't take them out, you're not trading with them ever again. And I'm not trading with you either. End of story. Take them out right now. And those guys, those are big numbers, you know, like 1/8 of 5 million is, you know, these are independent locals. And everybody but 2 guys took them out. So we got them out at 90%. And within 2 weeks, we made back all the money that, you know, lost on that. And he, you know, did not trade with anybody but those guys, basically.
That's very nice.
Yeah. And guess what? Those 2 other guys,
They're dead
never
now.
traded with them again. They no longer walk on the floor. So, you know, that's the type of world. And again, this some of what I've said here probably isn't kosher with certain regulators. There's no names, you know, some of the names, some of the stories may have been exaggerated. This may not even be a true story as far as everybody knows.
No, it's true.
But,
And this is all financial advice, and I'm going to
Yeah,
take
yeah.
it, and I'm going to
But
quadruple
that's how the real
leverage
world
it.
works, you know? And so we made, you know, the other guy let him out of the trade. At least he didn't, you know, and we took him out of the other side of the trade. But that's the kind of world it is. And you know, there's like I said, there's a code, and you got to live and work together, and you have to have compassion and do the things. But it's a real community down there, and nothing quite like it. It's like going to war. I feel like you know, when you're in that. It's both hell and sometimes like once you're out done with it, it's like I look back at those times and I don't know that anything will ever truly compare, right? So everything else is just so dull.
I bet nothing hits quite like a Chicago hot dog after a long day on the floor with your boys.
Oh,
picking
some of
it
the
up.
food, like that's the thing too. You're down there during the great financial crisis. Nobody left that floor. Like literally
Sure.
from the moment markets opened, the moment it left. So the food is coming
Yeah, we're-
through. People are like eating and leaning on top of each other. Like it is, yeah, on the world.
I have one final question, because you know I'm blocked by Tom Lee. I regularly like to talk trash. I like to mock Peter Schiff because Peter Schiff loves to. I mean, credit where credit's due. Gold is at an all-time high. I want to know, who do you despise the most on FinTwit? Who do you think is overrated? Who do you want to call out?
Man, you
Besides
follow
Travis, of
me.
course.
You know I'm a lover and not a,
I know,
not a
I know.
hater. I'm not a hater. Now, if you come at me, I'm gonna let you know that facts. I'm gonna kill you with facts all day.
Yeah, and
I'm just
gifts.
gonna bury you with facts. But I'm not a hater. I don't hate people, and I forgive people too. Even people who this happened on the floor. They're guys that you just be like that guy's an a-hole, you know. But you know the guys that are a-holes, they're an a-hole for a reason. Their dad kicked them when they were a kid, or they did X, Y, Z, whatever it is, right?
Kicked.
Like the reality is nobody at their core is bad or evil. So I'm very yeah. I don't hate anybody. I genuinely don't hate people. I feel sorry for some people. I feel bad that
Yeah.
like, certain people are angry or you know like feel insufficient, that they need to make other people feel small or. So I'm not gonna go there. There are people who I don't respect as much in terms of their intellectual arguments and beliefs. There are people who I think are needlessly cruel or silly, like in terms of how they operate. But that doesn't mean that I hate them. So I'm not gonna name anybody. I'm not gonna do that. I'm sorry.
Right on. That's cool.
I know it's not as good a TV or why you know you want to see punches. Everybody wants to watch the train wreck, but I'm not gonna.
Yeah,
I'm
I
not gonna
like
give it to
one
him.
person I feel bad for is Jim Cramer. He just gets the shit end of the stick because he's constantly. I mean, I'd like to see anybody else make a ton of predictions all day, every day, and be right about them 100% of the time.
100%.
Yeah.
I completely agree. And by the way, that guy he knows his stuff. He's not an
Yeah,
idiot.
he does.
Yeah, yeah. And like
I
same
made
is
fun of
true
him
for-
on the show, yes, but I still think I respect him.
Of course.
Yeah, I respect you, Jim. And I was so excited. I was so nervous. I was like, this guy's. He's so smart, man. I can't wait to have him on the show. And like I said, I had so many more questions. I mean, every time you talk about flows and selling vol and fixed strike vol and all this stuff, I'm like trying to wrap my head around it. I'm trying to get better at understanding it. So I would like to save that for another time if you are willing and able to come back on the show at any point.
I'd be happy
But
to, Ben.
yeah,
And we could, like, again, if I'm in LA, we can do it in person. But
or here on Zoom, it's totally fine. But any any things you'd like to plug before we let you go?
yeah, I mean, not necessarily plug, but we do have a new thing on a podcast on the floor called "We Got You Got Options," where we are monthly talking to relatively big names across industry from a very kind of option centric kind of a view, where that's on the floor. It's kind of pretty cool. Produced by the SIBO, really high quality kind of thing. So I think people check that out. We have our wealth advisory business, as I mentioned, which is growing and really about non-correlated investment. So we got a lot of people in the door before this kind of train wreck who are sitting pretty comfortably in non-correlated strategies, making money. Instead of 60-40 stocks and bonds. I think if there's one thing I love is educating, and I think most of the world has been sold a bag of goods in 60-40, and I think they're going to figure it out, unfortunately, in a decade, and it'll be too late. So if you really are looking for somebody who helps manage risk, that's what I've done my whole life, and that thinks about returns and risk, as opposed to just, hey, if you stick around for 20 years, 30 years, you'll make X in the stock market. It doesn't talk about risk. We really focus on that part of the equation. So Kai Wealth, reach out, kaiwealth.com, kaivolatility.com as our hedge funds and our non-correlated and long vol products, which are all obviously crushing it in this environment. So yeah, those are the plugs, but otherwise, yeah, happy to come on again. There's a lot more to talk about, and enjoyed being on the show.
Thank you very much, Jim.
Thanks for coming on.
My pleasure, guys. Take care. Talk soon.